Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, May 21st, 2019. We'll keep this one short. There's really not too much to cover today. We haven't really seen many or any significant technical events today. So just a quick recap. Markets trading between support and resistance. Two key levels I'm watching about 289, we'll call it 290 if you want, down to about 280 or so on SPY. That's the recent lows and the level here. And again, that recent low, it's not just the reaction low, it's everything that happened back in late 2018 and earlier this year again. So pretty important support level. Bearish if broken. I do still believe it will be taken out sooner than later, but you got to remember, keep in mind we were quite oversold in the near term coming down to that level last week, and now that we're between support and resistance, as we may chop around for a little bit longer, consolidate, and still anybody's game, but like I said, I still think there's ultimately that range will be resolved to the downside here. QQQ similar levels, 179 or 178 at the lows, and 186 at the high recently. That's resistance. Again, that's not just an arbitrary level. It's not just the recent reaction high, which of course there is that as well. You always want to watch reaction highs for potential pivot points, resistance levels, bullish if taken out, bearish if we fail there again. But it was also, remember, that was the failed breakout in QQQ. QQQ put in a double top high back in 2018, broke out, traded above there for a couple weeks and failed that breakout, came to back test that level again and failed again. So that was quite a bit of significant technical action, if you will, off that level. So that's a big level to watch right now. The bulls need to see that get taken out, and if they do, they'll probably have a good shot at taking out the previous highs. Bears want to see the recent lows go for the reasons I just mentioned before. Not only it's a reaction low, but also technically significant on QQQ as well, with a lot of reactions around that level. So that's it. And until then, we could chop around a little bit longer, or we could break out of this range any day now. It could happen tomorrow. Who knows? PPO, as I mentioned, still bullish, holding above that zero line, making a back test right now on both QQQ and SPY. Everything else that I've covered recently, but let's zoom down to the let's look at the futures real quick here. ES, S&P 500, E-mini futures. We're zoomed in here a little bit on this 60-minute chart. There's a longer term. You have the uptrend line off the lows, which was broken back here, and we've been stair-stepping our way down within this descending megaphone type pattern right here. So again, this is largely an update to the video I did earlier today. I did an early session video for members only, and included the markets and as well as a lot of the trade ideas that we're watching now and in trading. There's that pattern there. So you want to watch this downtrend line. It's just slightly overhead from where the futures will continue to trade. So then maybe we hit that overnight, maybe not. Either way, it is resistance. And of course, you have that 2864-ish level right there, which is resistance. And so far, we popped a little bit above it today, but for the most part, that's about where we failed. So you have quite a few reactions back here in the past. And so those are the levels to watch. Breakout above the downtrend line, I don't see much stopping ES until it gets up here to about 2892. That would be the next resistance, and excuse me, and it's a pretty formidable resistance zone as well. So should QQQ or ES, I'm sorry, ES, the S&P 500 futures pop up there, that would be another objective shorting area. And if they take that out, that starts to bring the bearish case a little bit into question here, but won't completely wipe it out. But again, that's where I want to see us remain down. Ideal scenario for the bearish case would be that this pop that we had today is about all that's left in the market, and it's going to go and take another leg down soon. Slightly leaning towards that scenario, so let's see what happens in the overnight session. And here's the 60-minute chart of NQ. These trend lines let's not put too much into the trend lines. Let's look at the price action here. Somebody had mentioned this in the trading room. Hey, that's a bear flag right here, Randy. It's possible. That's what I said. It's a little bit large in relation to the flagpole. If you want to consider that move down the flagpole, or at least down from here, the flagpole is the impulsive move leading down. But for all intents and purposes, it has the same net effect, whether it's a small rising wedge pattern or bear flag pattern. My answer was, if we make an impulsive break down below it, that would likely spark the next wave of selling and probably take us down here to that 72.75-ish level. That's about where we reversed, just a hair shy of that last week. Doing so, as I outlined, and again, it's my preferred scenario, more downside in the markets from here, minimal upside. If we happen to creep up a little bit more, my next resistance is about 75.43 right there, but I do prefer a thrust down soon. And in doing so, it might set the stage for maybe a swing trade. If we can come down soon, even undercut that support that I have there, and doing so, put in a divergent low right here, maybe even on the RSI, what I'm drawing out as a scenario. So this would be positive divergence. So let's use that arrow tool. Let's just say we thrust down here, undercut the recent lows, but then reverse, and we do so with putting in divergence here on the PPO and the RSI. That could set the stage for a nice swing tradable rally up. It is one potential scenario. I'm almost leaning a little bit against it, but I'm certainly going to look out for it. And if it starts to develop, or I think that may play out, then that'll be how I'll be positioned at the time, reversing from shorts to longs there. One other thing I wanted to show you before we wrap this up is, let's take a look at. Let's talk about the gap. In last night's video, I told you I was leaning towards maybe a gap backfill. Leaning towards some upside in the futures last night, and that's what happened. We did reverse and we lifted. The futures were up. NQ futures at one point were up well over 1%. The Qs themselves, QQQ, because it opened up with a gap, it closed up about 1%. But as the day went on here, I'm just watching both watching the price action as well as what I'm about to get to here on the FAANG stocks. I closed my longs, reversed it to a short, expecting a little fade into the close, or the last hour of trading is what I said. Within the last hour of trading, I expected a ramp there, or into the close. That's pretty much what we got. You can see it's not a whole lot, but that was right about here, heading into just before the 3 p.m. hour got underway, and they did sell off a little bit at the close. And what I was trying to point out here is, we failed to backfill the gap. There's the gap. There's where we closed on Friday right there. And normally, especially in a healthy trend, once you enter a gap from below, the gaps tend to get backfilled pretty quickly. So I view this as pretty much weakness. Yes, we were up today, but the fact that the Qs couldn't even make a backfill of that gap, what I think there is, I think too many eyes are looking at it, and you're going to have a lot of sellers stepping in there. Either way, maybe tomorrow they will backfill it. I don't know. I'll tell you, my convictions very near term aren't high right now, but I'll be clear. I went back to going back and in the active trading account, back to shorts, my swing shorts. That's a whole nother thing. IRAs, those accounts, that's swing trading stuff. That's still short. But in the active trading account, I went from going long, going home long in the futures and being long yesterday into reversing that before the close, and I think we'll come on down here and move lower for the remainder of the week. SPY 60-minute chart. Here's a downtrend line I covered in today's video. In fact, at the time we were down here, we hadn't hit it yet. It came in off the highs right here, or this high, not the high, but about the May 3rd highs. There were a lot of reactions right here. So here's a downtrend line to watch, and so far we stopped cold at it today. We didn't have an impulsive rejection off it, at least not yet. But I suspect we'll probably gap down tomorrow and come on back down and continue lower, just based on everything I'm seeing. And then finally, to make it real clear as to why I'm still favoring more downside in the market. The FAANGs are broken, and again, I said when tech breaks, the market breaks. When the FAANGs break, the market breaks. This is Microsoft. Here's our trend line off the lows on the 24th. Breakdown, back test. It's still above the recent lows, and that'll obviously open the door for another leg down. But this, to me, is a not an all-in kind of short broken chart, but it's a broken chart. It's a sell signal breakdown, and a stock that I think is going lower, and that's not even the worst of the lot. You look at Amazon, there's a nice wedge, overbought, divergent high, boom, breakdown, back test, and starting to, rolling over since the back test. I think you can see it there, but just to show you what I'm talking about, here's your breakdown, there's your back test, and so far moving lower, and also below this, I think that's a pretty significant former support, now resistance level about 1875.50. So I think there's more downside to come in Amazon, and if there is, that almost guarantees that QQQ will head down as well, since Amazon's such a top weighted component. And then of course you have Apple. Apple, hit this target here the other week ago, 182.50ish, bounced back, made almost a perfect backfill of the gap, and then boom, moved back down, hit that level once more, bounce. But this is just a stock that's not looking, it's looking weak. Here's a stock to me that just broke down recently from a nice clean bearish rising wedge pattern, divergent high, had a break, initial leg down, little counter trend rally, kickback rally, stopped right where it should stop on the backfill of that gap, which is resistance. It could have went up here to 197.70 and still, very well fit the, a normal counter trend rally within a larger trend. But I think Apple has more downside here. And then I gave my color coded targets. This is where, where things will start to change from just a healthy correction action to things are going to get a lot worse here in the coming weeks to months if these levels go, especially that last one. So there's Apple, just not looking hot, still well off the highs, and as you guys know, that's a market leading stock. Alphabet, we all know what happened to Alphabet. This chart's a little busy. Let's just jump forward to Facebook. Facebook broke this. This is the primary uptrend line I had. That's a breakdown and a near back test. I have a secondary trend line here that hasn't given way yet, but it's close to. And again, it's just everything else that was already priced into the charts. The divergences, the extreme or very overbought readings there, and of course when I go out to the weekly charts, which I'm not going to do here. So this, taken together with what's going on in the markets. But when you look at these market leading FAANG stocks, and make no mistake about it, the market is not going to new highs without these guys. These stocks are pretty much the market. They're very overweighted, especially in QQQ. They're top weighted components of the S&P 500. And more than that, it's the psychological impact and emotional impact. A lot of people love these stocks, have a lot of money in these stocks, are overweighted, both individuals and institutions. So that's that. So there's my near-term outlook, and we'll see what happens tomorrow. If things go the other way, I've given you some levels to watch on the upside that might start changing the near-term technicals. But remember, at the end of the day, if we don't break down, reverse tonight, and head down and take out this level tomorrow, those recent lows, keep in mind that we could be looking at a little more chopping here. But I don't think we're going to chop here for more than a few more days. That's just my guess. I think in markets, when you start to get a correction, you get a little kickback rally for maybe a week or so. If the bigger move that I'm looking for is coming, I think it'll come soon. I don't think we'll have to wait much beyond this week. We'll see. We'll wrap it up here, and I'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.